With this smart money concept trading strategy, you will be able to pass every single prop firm challenge. Alright, let's get right into it. This strategy will take place on the 15-minute time frame, and we will use USD/JPY as our pair for today's video. We need to know two things. We need to know how to identify supply and demand levels, and to know that, we need to know how to read market structure. So basically, when price is moving upwards, being in an uptrend, the price moves, creating a series of higher highs and higher lows. When price moves downwards, basically when price is in a downtrend, the market moves down in a series of lower lows and lower highs. Where do I see a demand level? Where can we see a demand level? A demand level is the level that was created before a very aggressive push to the upside in the market. Basically, when price is breaking upwards, breaking structure and going higher and higher in a uptrend, that's when we create demand levels. And basically, a demand level is placed on the last down candle before the aggressive up push occurred. Okay, so in this example right here, on the higher low, basically, we will identify a demand level. And on the opposite side, when the market is moving in a downtrend, that's when we look for supply levels. A supply level is pretty much the last up candle before the aggressive down push occurred, okay, and broke structure lower. This is when we look for supply levels. After that, after we identify our supply and demand level, what we need to look for is a retracement in those levels, and after that we will scale down on a lower time frame, and that's where we will look for a candlestick pattern to get into our trade. Okay, it is very simple, so let's get right into some examples. Right, so we are going to use recent price data. This is literally from last week. Okay, and I will use the bar replay. Okay, so we can be in real time. We can follow the market in real time and tell you how I would proceed with this trade. So right here, check this out. Straight off the bat, we can see, we can read market structure. We formed a high, then we formed a higher low, we formed a higher high, a higher low, and a new higher high. So we know from market structure that this is a uptrend. Okay, right here we have a uptrend. Even though we were very bearish for the last period of time, we are now in a uptrend, and that means that we look for demand levels. Where do we spot demand levels? The demand levels are basically the last bearish candles before a aggressive up push, and in this case right here we have a solid demand level sitting right here, okay, on the 15-minute time frame. Now all we have to do is wait for price to get into this zone, and then we will go a time frame lower. Okay, so let's wait. Boom, right there we will go on the 5-minute, and on the 5-minute we will enter based on a candlestick formation, and we do have one right here. Okay, so we will enter right there. Stop loss will be below the zone, okay, and the target will be a new high. Okay, so you can aim the previous high as your target, which will be a very nice 1 to 2 risk to reward ratio. Okay, so let's see how this plays out. Okay, we face a bit of drawdown, but that's part of the game as well. And boom, check this out. Take profit smashed. Very beautiful setup. Now let's look for a sell setup as well, because now we covered a buy setup looking for demand levels because price is breaking upwards. Okay, so that's why we looked for demand levels. Now let's see what we can find here when we look for a sell scenario. All right, so again, here we have a very good example. Again, this is literally from last week. Okay, so you will be able to find setups every single week with this strategy because it's on the M15 time frame. Now, of course, you can also try it on different time frames, but make sure you do your own diligence and backtest it yourself. Okay, make sure to do that. Right here, we go lower. Basically, it's very clear to see that we are breaking lows constantly, and when we do that, we basically look for supply levels because we are in a downtrend. So that means that, look, check this out. We broke structure here. Very clear to see. We have a BOS right here. You can also mark it if you want to, if it helps. We have a BOS right here, okay? And after we know that we broke lower, we then look for a last up candle before the aggressive down push started, okay? And we have it right here. This is our supply level in this scenario, okay? This candle right there. So now all we do is we wait, okay? We got in the zone. We go on the 5-minute and we look for a candlestick confirmation. Now, for me, a doji candlestick is a candlestick confirmation, and that's where exactly I would hit the sell trigger, the sell button. And now there's two ways you can go about your stop loss. I forgot to mention this. You can either place it above the zone, or you can be more aggressive and place it right above or below, above the most recent high, or below the most recent low if it's a buy. Okay, so let's do both scenarios here, and now we will extend our target, to a new low, okay? Because like we said, we will aim for a new low to create. Okay, so if we enter conservative and we place our stop loss conservative, we will have a 3.3 risk to reward ratio. But if we have a more aggressive stop loss, we will have a 7 risk to reward ratio. Okay, so basically if we risk $100, we can make $700 or $330. Let's see how these setups play out. Okay, so boom. In this scenario, both setups would have hit take profit. Another alternative would be to basically have two positions, 50% on the aggressive position where you place your stop loss more aggressively, and then 50% on the more conservative position with the more conservative stop loss. Okay, this also works. Or you can just choose one between them. If you want to be more aggressive, then sure, go ahead and be more aggressive. You will always have a bigger risk to reward ratio, like in this scenario right here, but you also need to understand that you will have a lower win rate. Okay, so it comes with pros and cons. It is up to you to understand what your style is and what do you like to go for. Do you like to have a bigger win rate? Then sure, go ahead and be more conservative with your stop loss size. Or if you want to be more aggressive and go for these bigger RR trades, then go ahead and be more aggressive with the stop loss and place it right above the most recent high if it's a sell, or below the most recent low if it's a buy. Okay, so that being said, this was a sell example as well. Also, a thing that I wanted to mention is go ahead and click the first link down below in my description to go ahead and join my Telegram group, where I literally send out the trades I enter every single day. So if you don't want to miss out on them, and if you want to see how I trade, make sure to do that. It's literally free. So go ahead and check it out. And apart from this, what can I say? This is pretty much the strategy. It is super simple, and the more simpler a strategy is, the better, because you don't have to be overwhelmed. So it's very simple. Let's quickly recap. We first need to look for market structure. Then we need to look for the supply or demand levels, depending the trend we are in. If we are in a uptrend, then we look only for demand levels, okay, like we did here. Okay, like we did here. Let me close the bar replay. So like we did here, we only look for demand levels if we are moving upwards and breaking highs. If we are moving downwards and breaking lows, that means that we are in a downtrend, and that means that we are only looking for supply levels. Okay, after that, after we have our levels marked up, we wait for a retracement for price to enter those levels, and then we go a time frame lower and look for a candlestick pattern to enter the trade. And after that, we place our parameters, our stop loss above the most recent high or above the supply or demand level, depending if you want to be aggressive or conservative. And then the take profit should be the most recent low or the most recent high. All right. That being said, this is the strategy. I really hope you all enjoyed it. If you did, make sure you are subscribed to not miss out on future uploads like this one. Feel free to ask me anything you want down below in the comment section. If there's questions, if there's any idea you guys might have for the upcoming videos, go ahead, feel free and let me know. And as always, I wish you all a lovely day ahead, and I will see you all in the next video. Goodbye.